what they issue, their debt paper, is what everyone else calls money. And I am very much a iconoclast. And then there are people who agree with me, but not very many, when I say the dollar is not money. Obviously, $3,000 gold being on my mind, and to your point, that's kind of a scary, dark scenario. Is the world repudiating the dollar? Absolutely not. Are people repositioning a little bit at the margins right now? Yes, they are. And they're starting to think about what does a post-dollar world might look like. Nobody has a clue and nobody has a path to get there. Well, Monetary Metals does, but leaving that aside. So they're starting to think, I want to own a little bit more gold and a little bit less of this, world's reserve currency.
The U.S. maintains its debt through the dollar's global reserve status, but reliance on the world's most indebted nation is unsustainable long-term. Gold, a traditional hedge against uncertainty, has risen over 14% this year. Trump's proposed tariffs include a 25% levy on steel and aluminum, effective since February, with more sectoral and reciprocal tariffs set for April 2nd. Meanwhile, the U.S. dollar index hovers near a 5-month low, enhancing gold's appeal to international buyers. According to the World Gold Council, central banks purchased over 1,000 metric tons of gold in 2024, the third consecutive year of significant buying and nearly double the past decade's average. The U.S. remains the most considerable gold holder, with 8,133.5 tons stored at Fort Knox as of Q4 2024. KeithWeiner, founder of Monetary Metals, attributes recent U.S. gold inflows to traders hedging against potential tariffs, a bank-recognized risk. He sees gold's rise driven by capital reallocation, unlike silver, which lags due to differing investor dynamics. We're about to explore the video, but first, subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
I think the story is getting a little bit old and it's circulating around, but the flow of gold into the United States from the rest of the world, right? So it's come from the UK, it's come from Switzerland, it's come from, Asia. And there's a certain irony to it, right? When gold is flowing out of the COMEX warehouses, the gold people say that's bullish. And now that gold is flowing into the COMEX warehouses, that's bullish. But, there's been a lot of theories, I'll just say that, as to why the gold is coming in. One of them is that, of course, there's a lot of questions around, does the Treasury have the gold, the 8,000 tons that they say they have? So one theory says they don't have the gold anymore. And now the Doge is about to audit the Treasury and go to Fort Knox. Then they have to frantically fly it back in, repatriate it before this is discovered. Other theories about, Trump is making America strong again, is bringing the gold back. As is usually the case in the gold market, the reality is much more prosaic. But it's important to understand, and that is the big traders, right? So if you're a retail investor and you buy some gold, you buy some stocks, maybe buy some crypto, whatever, then you're hoping for a price gain. I think, and with stocks, maybe dividends. The problem now is the threat of tariffs. And with 2020 still fresh in people's minds, the risk, officers at the banks are looking at this and saying, you've got to move the gold into the U.S. If you get it through the window before the tariffs slam down, then no matter what may happen, you can deliver if you need to. And the banks are equally okay having physical gold in London versus New York. It doesn't really matter that much. So, the migration begins. Gold is flowing from all kinds of places because there's a spread there. That's all it is. And to make that spread, you now have to have it inside the U.S. in case there's tariffs. Now, I hope there's not going to be tariffs on gold and silver. I mean, I'm not a fan of tariffs on consumer goods, for that matter, but there's whatever the rationale might be to protect manufacturers of certain consumer goods, that rationale does not exist on gold. It's not a consumer good. This is a financial market. And if you want to tariff it at 25%, you'll simply destroy the futures market, force it to move offshore. So I imagine jurisdictions like Dubai are waiting patiently to see, hey, is this coming our way? The U.S. renders itself non-viable, like India or Vietnam, you have a big tariff that just kill it. But it explains why all the gold's coming in. It's kind of a boring, prosaic kind of explanation. Spread traders are de-risking. Okay, it is what it is. And, if tariffs are serious on this stuff, then we'll see what happens. That's one thing that's on my mind. Obviously, $3,000 gold being on my mind, and to your point, that's kind of a scary, dark scenario. Is the world repudiating the dollar? Absolutely not. Are people repositioning a little bit at the margins right now? Yes, they are. And they're starting to think about what does a post-dollar world might look like. Nobody has a clue and nobody has a path to get there. well, monetary metals does, but leaving that aside. So they're starting to think, I want to own a little bit more gold and a little bit less of this, world's reserve currency. Is that a good thing? Well, not for the vast majority of people that have their capital in dollars, including productive, businesses, the companies that make the stuff that we all rely on, like food, energy, computers, video cameras. There's an erosion of their capital going on, which is ultimately going to make us all poorer. What could come with tariffs in the future? Can there really be any certainty that because we don't get a gold tariff today, can anyone really be certain that we're not going to get a gold tariff next month or next year? There's certain things that are just best off, like this is kind of an infamous thing, like on sitcoms or whatever, a couple is quarreling, or maybe a dramatic movie, a couple is quarreling and suddenly one says, well, if you do that, then I'm not going to love you anymore. Boom. Those words are said. They can't be unsaid. And now forever there's a cloud over that relationship forever. And that's the danger with, maybe we're going to tariff gold. It's out there. It's not fully rescinded. So I'd imagine, we'll see. I could end up eating my words. Someone's going to pull up this video in 5 years. See, Keith, you said. But my guess would be that the inventory levels in New York, not necessarily in the COMEX. One of my big points that the gold world sort of should understand, but sometimes doesn't appreciate. Right, but what I'm trying to get at is there's different groups of people that are the traditional silver buyer versus the gold buyer. And the silver buyer has been sidelined because the labor market is under pressure, especially globally. The gold buyer is trading off against other capital assets, and capital assets have done, very well, and therefore there's plenty. I mean, look at crypto, right? The crypto's, Bitcoin shoots up to 100,000. Everybody who's looking to lift their crypto position a little bit, they don't necessarily want to buy fiat; they buy gold. So, gold it's a different group of people that are buying the gold versus the silver. And that's why, gold keeps making new all-time highs every day, and silver is nowhere near, right? It would have to go up by 60-70% in order to get back to an all-time high that it made in 1980. I mean, this is old.
And that's not even controlling for inflation.
Right, that's just nominal price, right? And, will that happen before the end? Yeah, it may. But right now, silver is in a different place. I think silver's bullish, but not the same way gold is. So we just published our gold outlook report, which we do every year. And I don't want to give away the price targets, but I said, okay, look, if gold gets to this level, then that means silver is, could get to this level. And the silver level is going to disappoint a lot of people. Whereas the gold level, everyone's going to say, there's a lot more juice there. So we'll eventually flip, and will silver outperform? Will we see a gold-silver ratio of 30 again? Maybe. I'm not seeing it in the data right now, that's for sure.
Gold's ongoing rally has been driven by multiple factors, including signals from the U.S. Federal Reserve indicating potential interest rate cuts, uncertainty surrounding global tariffs, and rising geopolitical tensions, particularly in the Middle East. These conditions have contributed to 16 record-breaking gold prices in 2025, with 4 surpassing the $3,000 mark. Analysts anticipate that gold's upward momentum could continue, potentially reaching $3,500 per ounce, as investors turn to the precious metal for stability amid growing global debt, recession concerns, and a widespread monetary easing cycle. Join the conversation, share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.